All right, good evening and welcome to yet another web weekly forum with Smartkarma. I'm going to run through the customary disclaimer as we wait for attendees to stream in. So first things first, the weekly forums are strictly for Smartkarma subscribers. They're meant purely for informational purposes. They do not constitute investment advice. They represent the opinion of our insight providers and not of Smartkarma. And lastly, but quite importantly, Chatham House rule applies. So please do not share any of this information on public media or social forums without prior permission. First of all, I want to also wish all of you Eid Mubarak and Salamat Hari Raya for friends amongst us who do celebrate the festival. And thank you all for also dialing in on what is a public holiday in a large part of Southeast Asia at the moment. So as we typically do, I'll begin by doing a little recap of some of the topics we discussed in previous weeks. The purpose here is to give you a sense of the variety of ideas and also how each forum is structured. Typically in every session, we look at one small cap, one large cap, and one interesting theme. These ideas are picked using a special data-driven methodology, which picks for ideas that are very popular amongst the user base. So last week, for instance, we took some time to listen to Samir Taneja, one of our analysts, pitch Oriental Watch. This is a small cap listed in Hong Kong, and we were looking at it both as a value and growth play with some sort of key catalysts going into results in June. The stocks actually had a great pop in the week after. Terrific, someone seems to be listening. Then we took a look at a contrarian large cap idea in China in the sort of cyclical space called China Communication Construction. This is the type of name that we like to look at typically when everyone has abandoned it. It was a stock that's on 5-year lows, and one of our analysts that's based in Shanghai in this case is the one who's sort of highlighting the value and is highlighting the cyclical recovery that's taking place, and also highlighting the fact that the management are very keen to see share price go up. And lastly, we looked at Cam Hui's call of sell in May and where to position to hide what could be uncorrelated assets or parts of the market. And this too has been sort of very prescient and timely given how wobbly the market has been in recent days. The week prior to that, we looked at Del Monte and the Philippine Stock Exchange. We've been sort of featuring this sort of a bunch of ideas in Philippines recently, simply because we see a resurgence in the market. It used to be a real market darling in 2016, 17, and then since then has really derated. So we're looking for interesting ideas. Then we looked at an upcoming IPO called WeDoctor. And lastly, in our thematic section, we spent some time understanding the private education companies in China. So like this, every week, we tend to break the forum into a small cap deep dive, a large cap, and a theme. So this week, we've got these three ideas lined up. First and foremost, we will look at a Singapore company that's actually listed in Hong Kong called Razer. Second, in our large cap section, we will look at JD. JD is, as you guys probably already know, JD is one of the largest e-commerce leaders in China, and they're about to spin off and list their logistics assets in Hong Kong. And we're going to examine how that could be an interesting event. And in our thematic section, we will spend some time on what has been one of the most intriguing insights on the platform in quite a while. We will examine the SPARS pandemic. This was a fictional pandemic written about 3 years ago, and some of the similarities with what we're seeing with COVID and what things that is revealing that we don't already know. Okay, so let's kick things off. So Razer, first of all, as I mentioned, this is a Singapore company that's listed in Hong Kong. The ticker is 1337. The market cap is just over $3 billion. And it trades about $10 million a day. So fairly actionable on a lot of those metrics. And now the inside that I'm going to heavily refer to in this presentation was written by Arun George, who tends to focus on the intersection of consumer and tech. And some of our analysts covered the IPO for Razer very closely. The IPO happened a few years ago, and we as a platform were strongly not in favor of this IPO at that time. But things are turning, and that's what we're going to take a look at. So first things first, just a quick introduction. So Razer could be a household name for you if you are a gamer. Razer makes a bunch of hardware, software, and services targeting the gamer market. So they make, specialized keyboards, peripherals like a computer mouse, and a bunch of other software and services too that are very, very popular amongst the gaming community. After having a very sluggish IPO and sort of spending a lot of time thereafter in the red, Razer actually started to turn around when in 2020 they reported blowout results. New growth actually accelerated from about 15% year on year in 2019 to 48% in 2020. And Razer was also quite sort of decisive. They shut down their loss-making phone division. So they used to also make an Android phone. Meanwhile, the very interesting bright spot was that the software and services side of the business actually grew much faster. So it grew by about 66% in 2020. And a large part of this growth was driven by the Razer Gold virtual credits, as well as their fintech business. So if you look at the chart on the right-hand side, the blue line is sort of the hardware business. And that has actually sort of stopped growing, maybe grew a little bit in 2020, but there was very good growth coming from the rest of the company, which is great. Now, the guidance for 21 this year is quite strong. The company is guiding for what they say is going to be an outsized revenue growth year, but consensus estimates, so street analyst estimates on Razer are actually for revenue growth to slow down, in this year, partly because they think it's a tough year to repeat what they did in 2020. However, the company is also looking at profitability. They're targeting both GAAP and non-GAAP profitability in 2021. And if you look at the second chart, you can see how the EBITDA margin of the company has been sort of steadily improving. Now, as the company turns profitable, they're generating a lot of cash as well, and that will support buybacks. They're actually already in the market buying stock. We'll take a look at that in a minute. So free cash flow generation has actually turned positive. Last year they made 11.11% free cash flow yield. Now, what's also great is that a lot of the cash from the IPO still sits on the balance sheet. So the company has about $622 million of cash out of a $3 billion market cap, which is a very good position to be in. And on valuations, the company is trading at a 42% discount to Logitech. Logitech is a global player in the peripheral space. So if you take a step back, I think the way Arun concludes it's quite interesting. He says, Razer is transforming into a company that now under-promises and over-delivers. And he thinks that the fact that consensus is cautious is actually a great setup. The valuation is attractive. They're buying back stock. So a lot of these things are, pretty positive signs. And from our perspective, given that a lot of tech is under pressure and is selling off at the moment, means that if you're patient, you'll probably get pretty close to sort of pick up the name. Now, if I quickly take you to Razer on the platform, a couple of things that I want to flag. If you go and look at recent exchange filings, just look at this. 5th May, 6th May, 7th May, 10th May, 11th May, 12th May, going into April. These are all buybacks. So this company is in the market all the time at the moment trying to buy back their own stock. That's pretty positive. And the turnaround in results that Arun George was talking about, that is also quite interesting. If you look at this on a sort of semi-annual basis, you will notice that after being in the red for pretty much forever, the company has sort of turned around, both in terms of revenue and profits and cash flows as well. So that's sort of the summary of the thesis. Again, if you have any questions, you can sort of ask them now using the Q&A button. We'll try and answer them as best as possible. Sorry, we did not invite Arun to the call today, given it's a public holiday, but we can also post some of these as discussions on the platform, and he'll be sure to reply. If nothing else, I'll sort of keep going, and you can sort of post questions at any time. So this is the second section today is taking a look at JD into the listing of JD Logistics. So as you can see from this chart, interest level on the stock has been surging. Clearly, this is a big and important deal that a lot of people are looking at. And JD itself is listed both in the US as well as in the Hong Kong market now. So it's clearly a name that people follow. So let's go over some of the key things. The JD Logistics is looking to raise about $4 billion in the upcoming IPO. So you can imagine this is going to be a really large listing. JD.com owns 81% of this logistics business prior to the IPO. Now, with the $4 billion new capital raised and a 10% dilution, means JD's shareholding will drop to about 73%. That's still a pretty dominant stake in a very big business. JD also owns a whole bunch of other assets. So they have a stake in JD Health, which is actually our analyst's top pick to play modern healthcare in China. And they are an online platform to provide healthcare services. They also own a business called JD Digits, which is actually their fintech arm. Now, they have equity investments in a few other listed companies, Data Nexus, VIP Shop, Yixin, which is also now going to be seen as a key part of the net asset value of the company. On top of all of this, JD still has a whole bunch of investments in startups that are not really shown in the sum of the parts table. So if you look at it this way, and if you look at the implied value of the logistics business, and you try and back out the value that the market is ascribing to the e-commerce assets, you get anywhere between 6 and 10 times EV/EBITDA, which is actually very, very reasonable for an e-commerce business that's growing really fast and has a dominant, top 2 or top 3 market share in China. So this is why this logistics IPO is important. It's value crystallization, as well as it's going to show, the sort of implied value in that e-commerce asset, which is obviously their main core organic business. So if we look at JD briefly for a second, as I was mentioning, JD is now dual listed in Hong Kong as well as in the US market. In the last few months, the share price has come off a lot. I mean, from its highs of about $105 to 70. So, you've had a 35% pullback in what is a real leader. Of course, this is a multi-year compounder and has done very well. And now the logistic asset listing, crystallizes value. And that's what we wanted to show. If you look at JD Logistics, you'll notice there is a lot of research on the platform here. So this is certainly going to be a name that we will cover very, very closely on the platform. That's it on JD. Moving on to the third and final part of today's forum. As I mentioned, we're going to be looking at the SPARS pandemic and looking at also what that reveals about the current COVID pandemic. For this, I'm actually going to take you to Douglas's insight itself, and we'll quickly walk through this. So, Douglas is a South Korea focused analyst. He used to be the head of research at multiple firms, both on the sell side and buy side. But you know, the sort of freedom that Douglas enjoys in terms of introducing new ideas onto the platform was revealed in this insight. You can see this is very well read. It's already received over 2,600 views and a bunch of discussions too. So this really was popular, and this had not much to do with his core area of expertise, but I think it really caught the fancy of a lot of readers, and that's why we are featuring it today. So let's go through this, right? So in the year 2017, so that's about 4 years ago now, the Johns Hopkins Center for Health Security published a set of papers which was called the SPARS pandemic. Now, they had labeled it as a fictional event that happens in the year 2025 and lasts for 3 years till about 2028. So this was futuristic, this was fictional. The underlying document has been publicly available for the last 3.5 years. But for whatever reason, it did not receive much attention up until very, very recently. So I'll just click and show you the document on the Johns Hopkins site. It is a pretty big document. And you know what Douglas did was he sort of went through this fictional scenario and he looked at all the various things that were sort of similar or dissimilar versus this current scenario. So there you go. This is a very, very detailed research piece. It's actually a really fascinating read. Now let's go through the summary, and I'm going to sort of skip through this very, very quickly. So first things, right? So right up front in this document, you know, the scenario described is that of an echo chamber where, you know, basically billions and billions of people, they're self-restricted. They elect to interact only with those people whom they agree with, and they isolate themselves from everybody else. So, you know, to Douglas, this is very, very similar to the lockdowns that we have been experiencing. You know, more and more people have been spending time on smartphones and the internet, and sort of not really engaging with the physical community at large. Moving on, it describes an extended incubation period of 7 to 10 days. And they describe that during this time, the virus can spread in an asymptomatic manner. As such, isolating sick patients proves to be, you know, much less effective than previous, you know, breakouts. This is, as we all know by now, this has actually been a key feature of COVID-19. One of the reasons it's been very difficult to control is that a lot of the carriers are asymptomatic for extended periods of time. Thirdly, you know, in the early days of the SPARS pandemic, the scenario assumes that people are very hopeful that the outbreak will be contained quite quickly. However, it becomes evident that that strategy just does not work, and case identification and isolation is more challenging than initially assumed to be. Again, we saw this very, very similar. A lot of people for long periods of time thought they had just contracted the flu. And that certainly was, you know, a mistake. Next, you know, at that time, of course, this is December 25, no treatment has been approved. However, a particular antiviral drug called calociver, which has previously been used for SARS and MERS, was prescribed, and that was helpful. Again, very similar to remdesivir, which was initially being used to treat. And, you know, Douglas notes that even the names rhyme, right? Then by late Jan 2016, in this fictional paper, the WHO reports sustained transmission in 42 countries. You know, the disease is particularly devastating in developing countries with weak healthcare systems. And, you know, fatality rate is actually only 1.1% and so forth. People start to get bored. And again, very, very similar, you know, the fatality rate is actually, you know, quite low, similar to actual COVID-19. Next, Governments start making, using popular media and videos to encourage people to take vaccines. Again, this is sort of similar to these, videos we're seeing. I think this is a video that came out by Columbia University. Then the vaccination begins in July 26. So this is about 9 to 11 months after the virus initially breaks out. Now, this is also very similar. And there's actually, Douglas makes a very good point. There are some troubling thoughts on this timeline, because when this paper was written, which is in 2017, at that point of time, every vaccine that was known to man took about 5 to 10 years to develop. So Douglas makes a very good point. How did the authors of this document come up with a fictional thesis that an emergency vaccine could be developed within 9 months? And as we know, that's exactly the timeline that COVID has followed. So this is pretty eerie and quite bizarre that a fictional paper from 2017 predicted 9 months for a vaccine, when at that point of time, it used to take between 5 to 10 years. So quite bizarre. Next, some countries do not approve the use of the vaccine. In this fictional example, Japan was a country that did not approve because it had concerns that the vaccine trials were not fully done and the vaccine was probably not safe. They were concerned that there might be chronic long-term side effects. Again, kind of similar to the arguments of the anti-vaxxers at the moment, where there still remains uncertainty in the minds of certain doctors as well as certain patients about the side effects, and hence they're not taking it. Now, the next part is, I guess, moves beyond where we are in the timeline at the moment. So 2 years on, in Jan 27, efforts to vaccinate the entire US population were actively underway. At that time, there were antibiotic shortages. This is at the height of the cold and flu season. And, more and more people started developing pneumonia, which is interesting. This is quite disturbing because it talks about a secondary bacterial pneumonia that happens in people after the initial infections. So this is fictional, but, we've got to be a bit careful because we are starting to see, at least, hear about cases coming out of India that are developing a secondary infection. It is not bacterial pneumonia. I think it's a fungal infection, but this is something important to note. And then, what's the end game? So as more and more people start to get vaccinated, the focus shifts away from, vaccination to perhaps side effects. And here, again, people start to sue the federal government in the fictional scenario, and the growing plaintiff cohort, eventually withdraws their lawsuit when they hear that a national vaccine injury compensation fund has been developed to aid and assist families where the vaccine has resulted in, serious side effects. So this is something that Douglas highlights could lie in the future. Of course, we hope this never happens and things are safe and side effects are low. But again, he thinks that now, as vaccination rates are climbing, especially in developed markets, the focus is probably going to shift away from rates of vaccination to rates of side effects. And as of today, we're seeing a lot of transparency in terms of number of cases and number of deaths, but we don't really have any transparency into number of side effects. So perhaps now governments will start, recording, tabulating, and maybe even releasing the number of side effects, and that will probably shift focus. So again, this is not the typical research piece on the platform, but it was just so unique and so different that we thought it merited some discussion and presentation at today's forum. And we would encourage you to sort of read this in more detail. With that, I'm at the end of today's presentation. If you guys have any questions, I would welcome them. Otherwise, you've got the whole platform. You can post your questions and analysts can answer them at your disposal. We always welcome your feedback. And I would also sort of once again wish you a very happy Hari Raya for those of you who celebrate the festival. And also all the best for the upcoming weekend. Hope you have a safe and restful time with the families. One bit of administrative announcement. The forum will be off for the month of June, just for about 4 weeks. We are sort of launching a few new formats and trying a few new things. So for about 4 weeks, we will still be sharing key ideas via email, but we will not be running the video version of the forum for that brief period of time. So just to take note. Thank you again for participation and hope to see you next week. Cheers, bye-bye.